Hey everyone, welcome back to the channel. Today we're diving into one of the biggest tax policy discussions happening right now, something that could drastically change how millions of Americans are taxed. What we're hearing from the White House and lawmakers might sound shocking to some, but for those who've been following closely, it's exactly what many expected. There's serious talk about eliminating federal income taxes for certain types of income, including overtime, Social Security benefits, and tips. And if you're someone who earns overtime or lives off tips, or if you're a retiree collecting Social Security, this update is especially relevant to you. Let's start with what we know so far. Former President Donald Trump has made it clear that one of his long-term goals is to eliminate federal income tax entirely and replace it with tariff revenue from imports. That idea is gaining traction again, especially with Trump looking to make a strong policy push ahead of the next election cycle. In the short term, his allies in Congress are working to implement pieces of that bigger plan. That includes the elimination of federal income tax on overtime pay. Initially, this was presented as an open-ended promise. No limits, no caps, just full tax relief on all overtime. But as with many big ideas in politics, the details are now being refined, and that's where things are changing. According to a new report from the Wall Street Journal, a Republican proposal aims to cap this overtime tax exemption. Under the plan, individuals earning less than $100,000 annually and married couples earning under $200,000 would be eligible for the benefit. However, the tax-free portion of their overtime income would be capped at $10,000 for individuals and $20,000 for married couples per year. This is a significant shift from the original open-ended promise. What's still unclear is whether this cap refers to the amount of overtime income that will be exempt from taxes or the total tax savings individuals would receive. Lawmakers haven't clarified that yet, and it's a crucial distinction that will affect how impactful this proposal really is for working Americans. But over time, income isn't the only focus. President Trump's broader tax plan also includes the elimination of taxes on Social Security benefits. As it stands today, up to 85% of a person's Social Security benefits can be taxed, depending on their total income. Eliminating this tax could mean real financial relief for retirees, especially those living on fixed incomes. Similarly, the idea of eliminating taxes on tips is being seriously discussed. For millions of workers in the service and hospitality industries, tips make up a huge portion of their income. Making that income tax-free could offer a substantial boost to their take-home pay. Again, though, the concern now is whether income limits or other restrictions will be applied to these changes, just like they are being considered for the overtime exemption. So why is all of this coming up now? One major reason is that the Tax Cuts and Jobs Act of 2017, the signature tax reform passed during Trump's presidency, is set to expire at the end of 2025. If Congress does not act, tax rates will revert to pre-2017 levels starting January 1, 2026. And that doesn't just mean higher taxes for the wealthy. It means higher taxes for everyone, including low and middle income earners. Tax brackets will shift, the standard deduction will shrink, and many Americans could see their tax bills increase by 2%, 3%, or even more. Trump and congressional Republicans want to not only make those 2017 tax cuts permanent, but also add in new benefits like the overtime, Social Security, and tip exemptions to build support for a comprehensive tax overhaul. There's also a growing emphasis on shifting revenue sources. The idea is to move away from taxing income and instead focus on tariffs, taxes on imported goods. Trump has argued that tariffs could generate enough money to eventually replace the federal income tax entirely. Supporters of the plan point out that tariffs already bring in billions of dollars, but economists are skeptical. Tariffs can drive up prices for consumers and might not generate nearly enough revenue to fund the federal budget. That's why, at least for now, this push is being viewed as a trial run. If tariffs can deliver enough revenue and public support is high, this model could expand. If not, the federal income tax will remain a permanent fixture. Now keep in mind, none of this is law yet. We're still in the early stages of legislative discussions. There's no finalized bill on the table, no vote scheduled in Congress, and nothing for the president, whether it's Trump or someone else, to sign into law. These ideas are being floated publicly to gauge reaction and build momentum. Over the next several months, we'll likely see draft legislation, intense debates in both chambers of Congress, and ongoing negotiations over what stays in and what gets cut. And with the 2024 election around the corner, tax policy is going to be a major campaign issue. So, what does all this mean for you? If you earn overtime, rely on tips, or collect Social Security, there's a real chance you could benefit from these proposals, if they pass. But the version that gets signed into law could look very different from what's being discussed today. Income caps, deduction limits, and other fine print could shrink the size of the benefit for many Americans. That's why it's so important to stay informed and pay attention as these discussions unfold. If you found this update helpful, do me a quick favor and hit that like button. It helps more people see this content and supports the channel. And if you want to stay up to date on major financial and political news that impacts your wallet, be sure to subscribe and turn on notifications. I'll be tracking this story closely and will bring you the latest updates as soon as new information comes out. Thanks so much for watching, and I'll see you in the next video.